Hi folks, Lee Gettess here with the market sense for the week of July 8th, 2014. The charts that come from my software is Trade Navigator by Genesis. And we're looking at a weekly bond market chart here, and you can see bonds last week on the employment report took a poke down through the support and marginally took out the lows of this sideways period. I think they took it out by 4 ticks, if I remember correctly. But you can see they turned and closed back up above it. This week, that support is down at 134.24, and they have not been down to it. They simply started up. I thought they might hold here in the 135.28 area. They clearly have not, and it sure looks like they want to at least test the 137 area here. There's nothing to stop them from going to the old high here at 37.12, and actually the ultimate high up here is 138.12. Both of those things are very possible, and the old high kind of coincides with the upper Keltner band, so that's perhaps a bit more likely. But I actually think the most likely thing for them to do is to just hold right in here and remain in this sideways pattern. It's like they've tried to take it out to the downside, so now they might try the upside, but it would be unusual for them to just snap right back up in 1 week. Now, if they do, that's a pretty dynamic market, and this high here may not hold if that's the case. So we'll have to keep an eye on that. I'm not expecting them to explode, but the potential is there. Now, in stocks, we have sort of, well, it's not really the opposite situation, but we had them blow up to new highs on the employment report last week, and no follow through at all this week. Not only no follow through, but they could have held support here in the 1965 area. They have apparently not done that, and instead have gone down to the mid-moving average here at 1953. Now, because the trend is up so strong, you'd expect that to hold. But again, I would have expected the 1965 might hold. But now that they've traded 1953, there's a good chance that'll hold and they'll head back higher. If not, support goes lower to 1934 here at the lower moving average. And again, because of the trend, you kind of expect support will hold at some point. The next upside target is around 1986 here. And boy, as of the close last week, they certainly showed no signs that they wanted to do anything but continue up. So the amount of weakness so far this week is a little disconcerting, but I mean, come on, it's 2 days down. Unless they go more than 4 days down, I think you have to assume the trend is up and just keep trying to find places to buy them. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.